when we're searching for product market fit and really struggling every day, I don't know if the full remote works the best. I think gut is actually the output of the data, in my opinion, but in a very unconscious way. I think this trend of global access to the capital markets in general in a more borderless way will continue. So right now, just thinking about US equities, 18% of the investment come from outside the US. I think this continues to increase. And then I also think that US Wall Street, including NAIs, continue to be the center of the global companies to try to be listed in the future as well.
Yoshi, welcome to New York City.
Thank you.
And then big thank you for helping facilitate this great setup. Our friends at the New York Stock Exchange are hosting us in their beautiful podcast studio.
This is amazing. This is just really, really cool.
Yeah. I've recorded in a bunch of setups. This might be the coolest.
Yeah.
But Yoshi, so you just flew in from Kyoto.
Yeah, I did last night, yes.
As a Japanese entrepreneur in Japan, do you feel a little bit lonely?
Yes, I definitely feel that way because of multiple reasons. Because most of the Japanese entrepreneurs, as you know, don't work in an international setup like we do. Definitely not the US headquartered broker-dealer business like Alpaca does. So it's kind of hard to share what we go through. So we actually I personally hung around with a lot of restaurateurs in Kyoto who are much more international.
And what is it about the Japanese culture that the work ethic is amazing, but at the same time, you haven't seen in the last 30 years a big wave of entrepreneurs coming from Japan? As opposed to in the past, Japan really industrialized the world in many ways.
Yeah, like Sony and Toyota, Panasonic, yeah.
So what is it about the Japanese culture?
I think that's a really good question. Like I've been talking about this and I ask the same questions to the more senior persons who went through this business setup. And I think what I'm learning now is, especially after the World War II, obviously there was nothing left in Japan. So all the business persons, entrepreneurs, they are forced to go outside Japan to create the business, to bring the money back to Japan. So they manufacture something in Japan and sell it outside Japan. So I think that was the reason why we saw older companies like, Sony or Toyota or Honda or Suzuki, Yamaha, those companies went outside and became more well-known internationally. And then, of course, after that, until the bubble burst in 1990s, Japan was a very expensive place. It became the expensive place. Hence, all the business people don't really have to go look for the demands from outside Japan, which created this generation that they don't need to think about outside Japan. And I think that was really the reason why I feel like, during the 30 years, which, both of us lived through, we really don't see those Japanese entrepreneurs much outside Japan. And which may change since dollar yen completely changed, yen depreciated, things became very cheap in Japan, which means that Japanese people, businesses have to bring the money from outside Japan to Japan. I hope to see that change in the next 30 years, but we'll see.
One of my most recent guests was Lionel Barber, former editor of the FT, and he just wrote this book about Masa. SoftBank's Masayoshi-san. It's called The Gambling Man.
Yeah.
Highly recommended. As a Japanese entrepreneur, what is your view of Masa?
I highly respect him, definitely. And at the same time, looking at his upbringing, of course, his cultural heritage, but in addition to that, he went to the US when he was a high school student and went to the UC Berkeley in undergrad. So he's also the very special category of the Japanese entrepreneurs who are bilingual in English and Japan, which is already very rare. So in that sense as well, I truly respect him because it reminds me of what I went through as well, coming here in the US when I was in, sophomore year in high school and, went through the high school life here, trying to become, of course, able to speak English. So I feel very much, have a big respect to him. I used to work for SoftBank actually, as a student, packaging a bunch of the CD-ROMs, and when I was a teenager. So I did work for him once.
All right.
Yeah.
A lot of parallels,
yes.
Right? Yeah. I mean, we went to California.
Yeah.
How did that open your eyes? How did that change you?
Yeah. So I went to high school actually in the East Coast, but then, moved to the San Francisco when I started Alpaca in around almost 10 years ago. Very different, right? One is that going to high school in the US, meeting with a lot of different people, in a way being a minority, which you never feel the experience when you are in Japan. So you kind of have to speak up and show who you are. That has been very different. And then, going through this entrepreneurship, stuff in the California, that's also very different because now you also don't have any background of having worked for Google or Facebook or graduated from, Stanford. You come from nothing. So you have to think how to get some kind of stamp, which I thought about going to YC, and that we did. So that was really something that it really changed, how Alpaca became.
We're going to talk about Alpaca. Before we go there, tell us about your investing style. Well, if you had to describe yourself as an investor, how would you do that?
I definitely have two sides of the coins, very much a barbell strategy. One is extremely conservative, just doing the dollar cost averaging investing every month. And the other side of the coin is I go extremely high lever CFDs and FX trading or leveraged crypto 5 or 6 years ago.
Do you do that yourself? Do you set up your trades yourself?
Yeah. I used to do that when those high leveraged crypto was very much allowed in Japan. Then it was gone, so I stopped it. But yes, I used to.
What was your best trade, if you can remember?
Oh, it's really just I always trade with the very much short-term trading on the very much high volatility side. So I put a lot of leverage, 50x or something on the crypto. Yeah, back then when it was allowed. Yeah, it was allowed back then when crypto came out, and then just trade with technical indicators because at that time the movement of the price of the crypto was pretty simple. So very much high levered and just kind of bet on the one direction. And just exit very early. That was my trading style. But again, I do have this very much conservative side of myself. I do the dollar cost averaging, very boring as well.
How about you? You said back then trading and reading crypto charts and movements was very simple.
Yeah.
How about today? Isn't it also simple? Hasn't it become a proxy for just some macro signs?
Yeah. I think when you're trading short term with high leverage, macro became a little bit outside of what you see because you're trading looking at the chart of 1 minute chart, 5 minute chart, and at the most 1 hour chart. So it's not really a macro. You're looking really truly price movement. And then of course you think about, resistance lines because of certain macro stuff, but I really never thought about the macros when I was trading with the super high leverage like that.
And so bringing it down to Alpaca, maybe share a little bit of the story and then I have a lot of questions about the actual implementation and company building, which is probably the most interesting part.
Yeah. The reason why we started Alpaca was that before building this, Alpaca is really the API first brokerage infrastructure. And then also we're now self-clearing broker dealer. But really when we started it, it was really right after we sold the business that we were doing, which was combination of deep learning, AI technology with financial services time series database. And we're doing basically a lot of prediction capability solutioning to enterprise banks and then trading firms. So we were always thinking about how to combine this prediction technology into the financial markets and capital markets. But we also realized that it's so hard to scale that kind of solutioning business. So we wanted to build something that's scalable, which is actual product. And thinking about those predictions and AI technology, we also realized that someone has to be building basically the gateway or touch point that those AIs or today's words agents are able to interact, which we felt was very much missing at that time when we started it in 2017 or 18. That was the API. So that was a really reason why, because we went through that journey of building a lot of solutioning. We felt that we have to firstly build this API for the broader capital markets so that more companies and entrepreneurs and founders and services can be built up on top of it. So that was really the story that we went from that previous businesses into what we're building.
Always with embedded in mind, always with API first in mind. Are you telling us that AI agents actually strengthen the case for our APIs?
Yeah, Yeah. So when we started it, we actually didn't think much about embeddedness. We thought about API and developer first, and then touch points of those developers and programs and agents. That's what we really thought about, but we didn't think about embedding those things. But then we realized that we started getting a lot of demands for that kind of use cases. So we definitely had to expand our capabilities of our APIs.
When did the idea of serving the rest of the world come about?
Yeah. So when we launched our first stock trading API, that was really one-line tagliner we graduated the Y Combinator from. We were really only focusing on algorithmic traders and the people who automate trading. So when I was doing a lot of day trading, it was very much mechanical. You look at the patterns and then you automate in your head, or you start writing simple scripts, automate it. So that's what we were targeting. But then we launched it in addition to those user base at that time who were using Quantopian or companies like Numerai, Quant Connect, start executing with our APIs. But at the same time, there are more demands coming really from everywhere in the world who keep telling us, oh, I can build better version of Robinhood's. Oh, okay. I don't know if that's true, but if you think so, I think we can provide the tool sets. So that was really when we started building those other components in addition to just trading API, which is like account opening API, like, a bunch of the mid-office compliance components as a part of the API sets. So that's when we started seeing that huge opportunities from the entrepreneurs and services from everywhere in the world trying to connect into our APIs.
Today, what are because you're serving over 20 markets, right?
Yeah, we actually work with financial services in 40 different countries
40.
now.
Yeah. Where is the biggest pool coming from out of those 40?
Yeah, so it's pretty diverse. So it's probably a combination of United States, North America, and then Southeast Asia and the Middle East. Those are the three big regions that we continue to see very rapid growth.
And do you see similar demand for similar products across the board, or do you see cultural differences?
Mainly very much similar in terms of the access to U.S. financial assets. And that has been very, very big. And then if you look back 10 years ago, for investors owning U.S. capital markets or U.S. stocks, I think it went up from 13, 14% to 18 to 19%. So there is definitely demands and the interest coming from investors outside the U.S. very much interested in trying to have exposure to anything United States. So I think that continues to be a trend.
Yeah. Despite any macro turbulence.
I think so. Oh, I hope so.
Yeah, I think we all do, yeah. And so, this is something you think about a lot, but building a global team, I'm a big fan of that. As you will know, I grew up all over the world. I cover for my day job. I invest in many countries, but it's not easy, right? As a company, having a team in Europe, having multiple teams across Asia, several teams across the Americas. What has been your approach to, first of all, building a culture, but also serving the client across the board?
I think one thing that we always believed in and still believe in is that first thing is that in order to make this work, we had to go 100% full remote. I think that has been the requirement. Because even though we are in the same country or same language or same culture, if it was in office and some remote and there's an information gap between the employees, and then it becomes very difficult to be in sync as a one team. So as long as we have been focusing on that and requiring us to be so, I think other components such as coming from different countries or native tongue is outside English or different time zone, that had been the easier part to deal with, as long as everything is built on top of the full remote capabilities like Slack and the Google Hangouts and all those things.
So you started building a full remote company since pre-COVID?
Actually, after the COVID.
After?
Yeah, so we had about 20 on-site employees in San Mateo, and then 5 employees remote. And I think all of them are in United States. And then, of course, pandemic forced us to go full remote. So that's when we decided we had to change our org structure, started hiring from everywhere in the world, because at that time, it really didn't matter at that point. And then everything became very vague in terms of the fundraising or, how the risk money will be available or not. So we had to be very, very lean. So that really forced us to be that way. And after doing that, we also realized that it actually worked well compared to some remote and some in office. So we decided to do the full remote. And after the pandemic is over, we realized that there are so many clients everywhere in the world anyway. And then having a lot of employees from different countries allows us to understand about people in other countries. And I think that has been also very big. And personally, I really liked that part because I'm always interested. My co-founder Hitoshi and I have been doing backpacking, traveling everywhere in the world since when we were teenagers. So that has been always our interest. So we just loved being that way, I guess.
For founders starting to build companies today and kind of having that realization that like, hey, maybe I want a fully remote culture, what is important as a remote company to keep in mind when it comes to culture and processes? Where are you intentional?
I think when we're searching for the product market fit and really struggling every day, I don't know if the full remote works the best. We've never done it, right? Like we started doing it from Series A. So it's a very different phase. That's the only phase that we didn't do as a full remote company. So we cannot say to those people, but after that phase, I think there's a way we should be able to manage well.
Let's talk a bit about kind of investors, right? What are you offering today to investors, and what are perhaps your most popular products?
So we have two primary business lines. One is things called Trading API, which is a product for developer traders or hedge funds who trade through algorithms. We call it B2D as developers because it's API product. And then we have another business line called Broker API, which is very much clearing business. So we do B2B2C. We work with financial services like broker dealers, banks, investment advisors who need clearing and custody partners and solutions when they allow their end customers to trade stocks and bonds and cryptos and options and stuff like that.
And currently you work with hundreds of customers, is that right?
Yeah, so we work with more than 200 financial institutions in 40 different countries. We have more than 5 million individual brokerage accounts on our platform as well.
Is the appetite from your customers also to be able to invest beyond US equities? What are the kind of the second or third most requested features?
So we definitely saw, of course, that things changes around, but crypto was a big thing after the US equities. This is also, I think, Robinhood made it very popular and successful that offering stocks and crypto in the one thing became the norm and everyone wanted to follow it. So that was one thing. Now, last 12 months, things are a little bit different. Interest rates tend to go down. So people may want to have higher yield products like corporate bonds. And then we see the interest into other asset classes in addition to US stocks, especially for some region of the countries. For example, like Europe, they see US and of course like European securities as the main thing. Southeast Asia, they may see Chinese related stocks to be main things in addition to the US stocks. So we see definitely that kind of demand as well.
You mentioned B2D.
Yeah.
How does that change the go-to-market, selling to developers?
Yeah, I actually think about go-to-market to be threefold in our case, or maybe any API companies. If you are truly API companies, I think you always think about developer first, because that's your basically evangelists and then marketing engine to expand the funnel to talk about your API products. So we always think about developer as our first kind of very foundational go-to-market, or I wouldn't say go-to-market, but the community that we always care for and think as the most important. And then I think those developers tend to become entrepreneurs, or they tend to work for some other companies who have lot of developers that have choices or decision-making process to pick the services. So that became startups and, mid-market. And then we see the enterprise, which look at how the SMEs are doing, and then research what's behind the scenes. So I always see these three buckets by the API companies to tackle kind of simultaneously, go up and down the chain and make sure that you're doing bottoms up marketing and then also top-down selling as a sandwich basis. That's how I think about the go-to-market of any API companies.
Yeah, because if you're talking to financial institutions, you definitely need the top.
Of course,
right?
of course.
But more tech-forward companies, the developers are actually your best advocates.
Yeah, and then at the same time, sales cycle of the enterprise financial institution is like super long. So in order to make sure that you survive as a company, you also have to think about how to close the gap by other segments as well. And I think that's also the strength of true API companies who can really target the developer community, and then also the small and mid-sized companies as well, alongside with those developer community.
You mentioned crypto as a category. Are essentially TradFi and DeFi just merging into one? Are we soon going to stop talking about the two categories?
That's a very interesting point, actually. I think right now still we are talking about DeFi or TradFi, but yeah, true. In 20 years later, everything may be just one thing. That is a very good point. But I think like it started finally happening, like, you know, including Kraken, who decided to launch stocks with us with a partnership with Alpaca. They are now consolidating from crypto to futures through the Ninja Trader acquisition, and then stocks, options with Alpaca's partnership. So I think that trend will continue, in my opinion. And then there are other major crypto brokers in the world who may want to do the exact same thing. And I also see TradFi players who has been following Robinhood's path in many different countries. Look at what Robinhood does. So they started from crypto. They started from stocks. They do options and crypto. So that's how we've been building the API capabilities. So yeah, like I think they're gonna continue to go into the crypto side too.
I think also the betting companies
are going to,
because they're realizing the overlap of their audience is almost perfect.
Yes. So that which means I think more players are interested in futures in general, and the Kalshi's product is considered as a futures trading. So
Yoshi, tell us about some of the hardest parts for you building Alpaca, especially at the beginning, you know, as an international builder, as a foreigner in the US. Maybe what were some of the hardest parts for you to overcome?
I think like, you know, throughout the building this thing, regardless of being, I guess, international founder or not, we definitely had to figure out how to swim through the unpredictability of what happened in the basically like risk capital. Because I think product market fit, go to market, those are the things that we talk with the customers, we struggle and figure it out. And I think that's a process of building a company. But dealing with risk capital coming in, coming out, how we should approach the risk capital continue to drastically change because of the pandemic happens, or interest rates suddenly goes up, or sentiment changes, because like you are the investor, so you understand what you say to your portfolio companies, right? What I now embrace is that I have to just simply react as quickly as possible to what happens in the market. So that's what I learned. And in addition to that, another thing that I'm feeling these days is that because we start with very much heavy technology focused fintech company, even though we have been introduced in broker and like clearing broker, we have been a financial services company from day one. For some people, it's kind of hard to understand Alpaca is a very heavily regulated DTCC member or clearing broker dealer ourselves. So making sure that to advertise that we are like that has been also very difficult, because there's certain awareness that we're tech heavy. Yes, that's true. But at the same time, we're as heavily regulated as non-tech forward financial institutions as well. That has been also very difficult.
I'm guessing you're a video game guy. So you know how in video games, sometimes you've saved at a certain point in time, you play 10 extra minutes, you close it, but you reopen, you save, it's in the same point where you save, right?
Yeah.
If you could do that with Alpaca and like respawn and save at a certain point to kind of make better decisions at a certain point in time, where would that be?
I actually can't think of anything. I think like we did the best thing at the best moment for each of the phases that we went through. So I have no regrets on anything, that decision that we made. I, of course, worry so much about the decision that I'm making right now and then about to make in 3 months and 6 months. But I cannot think of that kind of moments.
And do you have a framework for making decisions?
Definitely. That's in process of making it even more framework, because in order to scale, we have to do that way. But that's very like kind of easier thing to do for me, I feel like, because there's a lot of quantifying process that we can do. And we have amazing team who can do that and strategizing. But what I'm worried about most is that by creating a framework, that's also creating restriction over the things that I should be making, and I maybe become even more worthless, if that makes sense, because that can be taken by AI if that can be all quantified and strategized in a proper way. So that's, I think, about a little bit of the worrisome, and try to figure out how to be outside the frameworks myself by thinking outside the box and making sure that I don't get replaced by the AI agents.
Who knows? So you're saying that gut matters a lot. It's not all about data to make a decision, right? AI can read the data, but
the thing is though, what I think is the gut is actually the output of the data, in my opinion, but in a very unconscious way. So everything that you're intentionally inputting, even including everything that you're not intentionally inputting or feeling or sensing, if the AI agents can be always observing that, then I think it would be the same results as what your gut says. I mean, that's what I personally believe.
Do you think we'll have AI managers managing human teams?
I think it's very much possible. Some component of the management job, for example, tracking the progress by numbers, which everyone does using OKRs, especially key results, and then making sure that who's doing well by green, yellow, and red. Having the other people and team members to be motivated or not, I think it's going to be a little bit more difficult tasks, but many components of what the managers do, I think, can be done by AI agents, because it's all about numbers and quantification.
Yeah, one of my guests, I believe it was last year, the founder of CloudWalk in Brazil, Luis Silva, he's a phenomenal guy. They've actually implemented a version of this.
Yeah.
It's a huge company, and I would like to see how it works, but it's exactly what you mentioned.
Yeah.
It's for the data-driven part.
Yeah. And I think like in order to scale, we have to do that to manage bigger scale team. And then as a CEO and executive teams, we have to look at the company with numbers in order to actually scale. So
what drove the decision to self-clear, right? Is that kind of chasing more control over your stack, your decisions? Is that getting legitimacy in the market? Is there something else?
Yeah, great question. I think that's definitely the two reasons why. I think in our business of basically clearing the custodies of the capital markets, there are two things matter in my opinion. One is how much of the, firstly, regulatory stack and licenses you own by yourself. So that in our case, we are down to the DTCC membership. So we don't rely on anyone, which means that we don't have to pay extra fees or some kind of decision making. We don't have to outsource the decision making or influenced by anyone, which if you are not, you rely on someone else. And the second pillar that you want to completely internalize is system and technology IP. And most of our existing clearing firms use the vendor software, which can be Brokerage or FIS or IBM, which means that everything that you do transactionally, you get basically costed by those outside vendors. And if you want to change certain things, then you have to ask them to change it by the waterfall system, so you don't know when it's going to be over. So those are the two pillars we always have to internalize to be really, really the best product that we can serve to our partners. So that is really the reason why we went self-clearing.
And once they launch something for you, it's available to all their partners or the customers as well, right?
Yeah, definitely. And of course, like there's a lot of nuances, right? Because if you are going to different countries, there's a different payment rails, there's a different timing of the money arrives and going back and forth. Those are things that we have to do as a company. And that's really our invisible IP that we have.
Yoshi, how does the investing world look like in 10 years?
I think this trend of the global access to the capital markets in general in a more borderless way will continue. So right now, just thinking about US equities, 18% of the investment come from outside the US. I think this continues to increase. And then I also think that US Wall Street, including NAIs, continue to be the center of the global companies to try to be listed in the future as well, given the heaviness stack of the US capital markets that's been built for last hundreds of years. So I think we just continue to see the trend to be that way. And then it's going to be more globalization, borderlessness. Although right now we see a little bit of course, deglobalization as well. But I think the overlying trend will be the same as what we've seen.
How about emerging U.S. investors investing internationally? Do you think that's also going to get democratized or not really?
I want that to happen, but I'm not going to bet into it myself because I kind of know also how the human nature is for each of the country and, people. Like even in Japan, I think only few tenths of the % of the people owns the passports. So if you think about that, they wouldn't even get interested about outside Japan because firstly, they've never been there. And two, they don't speak the language, which means they don't get the information about outside the country. So they even don't know how to get themselves attracted to outside the world. And I don't know how quickly that would change, not only to Japan, but most of the countries.
So before we wrap up, a few rapid fire questions. If you had to pick one or two favorite investors that you admire, who would you pick?
I definitely like Ray Dalio, just simply because of his kind of writing. It's always loved to read those things, yeah.
How about most underrated market outside of the US where you have a good number of retail investors?
It may not be already under-invested, but I always look at the countries like Indonesia and we've been talking about it, but Saudi Arabia, those continue to increase presence, in my opinion, in the world.
If I was to visit, let's say Kyoto,
yes,
tomorrow,
yeah,
for a weekend, what would you recommend?
Right now, New Green is amazing. So walking by the Kamo River, just simply doing that will give you so much energy and calmness. So just looking at the nature at this amazing time would be the best thing you can do in Kyoto.
And where do you want to see Alpaca in 5 years?
We basically connect. So our mission is to provide financial services access to everyone on the planet. So 8.5 billion people. So we want to connect. Right now, we're in 40 countries, but of course, we want to get to as close as 195 countries. And then we have asset classes of US specific and crypto mainly, but not only that, but all the global markets across the globe connected in one API. So that's really our goal.
We have a lot of books around us.
Yeah.
Are there books that you often recommend?
Yes, I actually recommend this one book called Magic of Believing. That book really allowed me to think about imagining something actually doable. If you think about it, it's actually doable. If you cannot even plan it, you won't even do it. So if you think about, for example, I have a green card, but how I got the green card is truly that. Just thinking about it, writing, and then making it visible. I think that actually make a lot of things come true. So I do recommend the book called The Magic of Believing.
That sounds like an excellent book for also aspiring entrepreneurs.
Yes.
I'll order it tonight.
Yeah. Okay.
Yoshi, thank you for doing this. Or should I say Yokokawa-san?
Yes, that's my last name. Yes.
Thank you. And thanks to our friends at the New York Stock Exchange again for hosting us.
Yeah, and then this is my honor. I've been listening to your podcast for a long time. So it's my honor to be on your podcast and actually seeing you, meeting with you physically and this amazing setup of the New York Stock Exchange. So thank you very much for this.
It means a lot. The pleasure is all mine.
Yeah, thank you.
All right.
The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.